Nice. Always interesting to see how the hair is going to look each morning.
Just worked out.
So yeah, I mean, let's dive into it. Looks like it's going to be a sea of blood today.
Soon on Hot Bobby with I think I jinxed myself there. Now, what's going on?
Well, they always try to blame the market on something. So Jay Powell spoke yesterday. He didn't say anything that was really surprising to anybody. They're going to keep the gas on, so to speak.
Wasn't that good news, though? I thought I saw.
Well, I think you always have to read between the lines when these guys speak. And the only thing that I could take out of that would be negative is their uncertainty level is extremely high. They just don't know, is what they seem to be saying over and over again. And yeah, they're going to keep rates low, near zero, for a long time to come, unless something changes, and they don't know if it will. So they're just leaving the opening there to do something different. And I think the market likes certainty. So that's another uncertain factor that's out there. The election's getting closer. The virus news isn't exactly great because there's a few spikes around the country. So
what
it kind of
right, when you have thousands of people linked arm by arm.
Well, I don't even know if it's from that. I mean, it seems to me where it's spiking are areas that were already open.
I don't honestly. I feel like these medical quote unquote experts have lost so much credibility. When you look at some of these articles, they're flabbergasted how places like Georgia, no uptick, and you see people are back in salons doing their thing, and then other places, it's not like that. So clearly no one has any idea what this even comes from.
I think at the end of the day, when the market dips at all, they try and attach it to a specific narrative. But I think it's important to address the fact that the market has run up so hot, so fast, and you almost need to see some sort of short-term correction. And obviously the hard part is when you see the market, it's going to be down 800 points, maybe 1,000, maybe 1,500. And you combine that with the last 2 days, which combines we're down about 600. You're getting close to that point where, you're quickly going to be at a 10% correction. And that's normal when you have a big run up. So
and you got all those stoolies running for the hills, which we want. All these Dave Portnoy obsessed fans are dumb money in my mind. Most of them have no clue what they're actually doing. And that's what I'm pumped about, is taking advantage of those people, because you're seeing it like crazy day to day here with some of these moves like Penn. It's obvious most of the money in that is dumb money, where they actually don't even have a pulse on what they're doing.
No, there's a lot of big time Penn.
I saw yesterday, there's no doubt. I have a feeling there's a lot of new money in some of these names that have helped them. I think we talked about it a couple of weeks ago, how much gaming ran up, and it was due for this because everyone and their mother was dumping money into these stocks, worrying about not being on the up and up when they dipped so much and just ran up. So FOMO, as we talk about, is so real in our country that it's bound. I think it helps these recoveries, but also leads to natural, quick corrections.
Yeah, look, I don't think you could just point out Penn. I know Penn is mentioned by Portnoy all the time. It's his company. But, the gaming, the travel, the airlines are all getting absolutely massacred today. They ran up the most. They're the first ones that are going to get hit the hardest. And they've been down for 3 days in a row.
I want to take over Sabre here. I mean, they're getting to the point where I think the Rolland group could buy them.
Well, look, Sabre's in that group, and it's under $10. So maybe all these under $10 stocks are the ones
Isn't it under $9 now?
No, I mean all the stocks under $10. It's under $8 right now.
Why can't it go under $5?
So the way it's also important to say, like, when you talk about the Portnoy thing, the way that these Robinhood apps are designed now is they basically feature the big movers of the day. So if there's
which is a
stock
sucker
that's
bet when you think about it, Dan. They like almost showcase that to trigger, to me, like I think that's led to some more volatility. That Robinhood.
Well, yeah, but if you look at like the companies that they've been all pumping and dumping, actually Plug was the first one that really made it on that list that was like a legitimate company. But it's not like the companies we're talking about here. It's not like when we're talking about Apple, Microsoft, Amazon.
Sure.
These aren't.
But isn't that interesting to think about, that they showcase the movers like that, almost where you got to think the sentiment when someone's seeing something going up a ton or down a ton, it's, they might naturally be just dumping money or selling money out of something like that. So I wonder what actually goes behind that.
I'll tell you guys, when you guys sold Plug yesterday, I was about to, and Baz texted me and was like, this is one of the featured stocks right now on Robinhood. He's like, watch it break out to 6. And it got to like 595, and we each, sold it. And right around like 592 or something, it was getting pumped up because everyone felt that FOMO effect of like one of these low dollar type stocks, but it was like a legitimate company. So it was a little different. So
you know what, though? I'm glad we did dump that, because even like one of Paul's buddies, like who's been asking me about tips, I saw it yesterday, and this is most people. They'll buy into something and then it goes up a ton and they're like, oh man, I'm buying way more of this. What were you thinking selling it? And in my head, it was the same thing with the Nikola thing, where this kid bought a ton of Nikola and it dipped a ton yesterday. And he's just like, oh crap. And I'm starting to think, okay, well, I think a lot of people are, they get FOMO, but then they get scared very quickly, where it's hard for them to have any type of even keel, where they don't know what they're even doing.
Look, this is psychology 101, right? That's what we're dealing with here. This happens over and over again in the market.
And humans are idiots. Let's be real. No one has any idea what's ever happening. So it's funny, the certainty thing you brought up earlier. There's never certainty in the world. So it's funny when people think there is and things are going great, when it's just the narrative until something's not certain. So that's what always cracks me up about the market, as we're maturing and being investors the last few years. It seems like something always has to pop up. Because if something's too good to be true, it is. There's no such thing.
So, Dad, go talk more about the psychology of it all, because I think that's an interesting point of where it goes from here.
Well, first of all, I could tell you this, going back even to the 87 crash, I remember our head trader would come up to the traders on the desk and say, listen, here's what we're going to do. I don't want anybody looking at their positions for the next 2 days. I want you to ignore whatever you got on the books and look at this market like it's a fresh page and buy and sell based on that.
A fresh Danish
page, like you're looking at your page and okay, it's clean slate. And, if you're not on margin, you could trade like that. You could look away from your positions. Look at today as you're going into Walmart and everything is on sale 10, 15% off. And
what
that's
if you are in market?
How you have to look at the market when it has these huge down days. Most of the time when you look historically, these are the great days to buy stocks. Even after big run-ups, we've had now over 1,000 point, almost a 1,500 point drop in the Dow over the last 3 days. It's very rare historically until recently. If you look at the last 2 months, we've had a lot of these kind of days. But if you buy on those days, it's usually a good outcome when you look a few weeks out from that. And it's hard.
But Dad, how about if you're in margin? What do you do in those situations?
Well, if you're in margin, you have to get your position square. You have to get to the point where you're not in margin or risk being forced to sell stocks. You can't.
Well, hold on. Let me just interrupt for a second. There's a difference between being in margin and being maxed out on margin. You got to be able to manage your margin. So, like, if you're in margin and you still have a lot more margin, and you got to be able to manage your margin. So the way
Dan,
it works,
you've done a very good job of that. Can you tell our followers, because I know you mentioned there's been a couple learning lessons when shit's hit the fan.
of course, I have done a lot of research on managing margin. And like people ask me, what's your strategy in the market? It's all about understanding how to manage the margin. And essentially the way margin works is you got to have 50% of what you're given in margin. So it fluctuates based on your value in the market. On days where it goes down, the amount that you have to use in margin goes down too, because it's all off of the value of the equity that you have. So when I say manage the margin, if let's say you have $10 and because of that your margin's then $20, you don't want to be using all 20 of that dollars, because you want to have room for days like today when if it goes down to 8 and your margin's only 16, maybe you only use 10 of the $20 and now you have those 6 extra dollars. That's like a scale example. Obviously it's not the amount of money.
So don't max out your margin, folks, in a bull market is what the real lesson here. Just because things are running up, that doesn't mean throw everything at it, because if you have no wind in the sails when things come down, then you're forced out of positions you might not want to. And I think to add to that too, Dan, an important thing, and let me know what you guys think of this. What I'm learning with margins, a lot of what you've taught me too, Dad, is anchoring staple stocks and keeping those long-term regardless. So when I've tapped into margin, I'm not adding to Microsoft and Facebook and Apple. I'm buying stocks that I'm swinging. So it's not like if I have to get rid of that, I'm getting rid of my staples.
Right, but understand though, if you do max out, let's say you're at the 20, you've got $10 value, and means that if the market goes down today, you have to sell stock to come up with what is necessary for whatever brokerage firm you use to be in compliance,
of course,
with the amount of margin requirement that broker has. So it really, what you're saying, Mike, is don't sell the staple stocks if you get into that situation.
Well, I'm just saying don't get yourself caught in a trap where what I've learned is, from the early experience with December 17, when I was getting aggressive with put options with Dan and things went awry, I remember thinking to myself, oh man, this is one of those situations I have to learn from, because if I had gone into like what I've been doing lately with tapping into margin, that was different because I was just with puts. But it got to the point where I was like, oh shit, I might have to sell a stock that I have no interest in getting out of here, which is obviously a huge problem. So that was a good learning lesson. And like you said, Dan, not to max out. That's why I've been making sure I'm not going more than halfway to maxing out. Right? Because it's kind of during these times, who knows what's happening. As much as I'd love to go all in, and I am that aggressive to do that, I haven't for that reason.
But what I like doing on days like today is adding to the gorilla stocks, I like to call them. Every
adding
group.
To the what?
Well, what I call gorilla stocks, and the gorilla is the big winner in a particular group. Like if you think in software, Microsoft is the best company, this is a great day to add to a stock like that. Or if you're looking at the banks, JP Morgan is known as the gorilla in the banking
or
group.
Dunkin' Donuts, the gorilla and jelly donuts. Like they've dipped a ton the last 2 days. That's a phenomenal buy right now.
You can say that. But
so back
but what usually happens when you have a big down day, people feel more comfortable when the stocks do turn to go into the most solid companies you can find. You're not going to get the highest percentage moves, but you're going to get the most consistent kind of moves.
Yeah, and to add to that, the way that I've always actually done margin, at least more so lately, for a while I was doing the put options as the strategy, but now I have my core positions, and when I find a certain stock that I really love long term has been beaten down, I'll use my margin to go very overweight on a name that is a great name in a situation like this. So
and then Daniel quickly get out of it on the run up.
I won't get all out of it, but like here's an example.
With that position though, with that amount.
Exactly. So like Microsoft is one of my favorite core positions, and a couple weeks ago when it was kind of treading neutral at 180, I used my margin and went really, really heavy on it. And I thought it would break out to 200, which it basically almost did yesterday. And then right when you get that move, before you actually hit the 200, this was something Dad taught me. So maybe at like 198, just because of the mentality of the actual numbers, that's when I then go back to my normal weight on the position, where I'm not selling Microsoft, but instead of like really, really having a massive position, I'm back to my normal size position. And
can you go over like the price, the risk analysis on that? Like take, for example, say you're going hard on $100,000 margin position, right? Where you're going into that for Microsoft. Let's go over here for our followers, just math wise, how that works. What are you paying on interest in that? Like what actually do you need to make in a return in a day for that risk to be assessed as a good move?
So everyone's going to have different interest rates. And if you're doing any sort of margin trading, you should reach out to whatever platform you use to get the lowest rate you can get. So the way it works, at least on each trade, I've gotten my rate at max, it's 4.5%. A lot of the times it's 2.5%, depending on the trade. It fluctuates, but it's an annual interest rate. So if it's 4.5%, that's 4.5% over a 365-day period. So if you only own the stock for 10 days on the margin, you're only paying the 4.5% on the 10 days. So again, if you actually do the math on that, let's say on 100 grand, if you owned the position for a full year on $100,000, it would be $4,500 if you're paying 4.5 interest. But if you own the position for a week, then you could do the math. It's essentially
a few $100.
A few $100. So if you're talking about a position like Microsoft, in the example you used, $100,000, if that stock goes up 1%, which gives you $1,000, you're making a hell of a lot more than the very, very small amount.
But I think that's very important to lay out for people so they understand exactly the math on making sure that they're not shooting themselves in the foot with doing that type of a trade.
I'll say right now, and at the end of the day, anytime you borrow money, there's risk associated, and you need to understand that risk and manage that risk. But right now, whether you're buying a house, buying stocks, being able to have access to capital is cheaper than ever. So to be able to use money that is being lent to you, and again, you got to really understand the risk management and understand how to manage the margin. Like, if you get set up for a margin account, you're gonna give it a lot more margin than you should use. And
keep in mind, that's a good point too. With how low rates are, anybody that has a trading account, make sure to reach out to the call center, to a customer rep, and use as leverage where rates are right now and say, listen, I need the lowest rate possible, and push them. And we talked about a while ago when this started, Dan, it can't hurt to ask. So definitely. At the end of the day, use that as leverage. Say, hey, I'm thinking about buying a house, or, I'm going to take my money over to TD Ameritrade from E-Trade. They told me they were going to give me a better rate. So you use anything you could. It can't hurt.
Yeah, I mean, I'm curious to hear from Dad how it used to be on that end, because to add to that, Mike, you don't even, like I was thinking about this last night, it's not even one or the other. You're essentially dealing with two different establishments entirely. So you can use capital and have a healthy margin account on a trading platform, and then you can use your wealth to also get a healthy loan at the smallest interest rate ever to also buy a house. We have both of those things happening at the same time, and capital cheaper than it's ever been. And I'm wondering, Dad, back when you were on Wall Street, I know hedge funds do the same thing. They're the most successful hedge funds. I'm having
issues here with the connection.
Hedge funds, when they get beaten down, the best thing possible is for them to be all in on margin at the bottom. That's like what they aim for. And if you shoot for that, it's you know that's like the number one goal of these hedge funds is to max out what they think it's the bottom, and then unravel it as it gets to the top. And Dad, my question for you is: were the rates always the same? Has it always been this way with the way margin is?
Well, the rates were back in the day. The rates were much higher than they are now. Obviously, I mean, if you go back a certain length of time, the rates were over 15% on night money. It depends.
Well, that was the Nixon era, right?
One of the advantages of low rates right now is low margin rates.
We're having terrible connection here, guys.
And I think that's something that not a lot of people really, I don't want to say talk about or even acknowledge, but even know. I mean, when you actually run the math like we just did, and again, I'm not recommending anybody go and apply for a margin account and get on margin because you need to have the money and you need to understand the risk management of it out. But at the end of the day, I think something that gets not talked about is how cheap it is to access capital and what you're able to do with the capital that's cheaper than ever with these insanely low interest rates to make money on it. And it's something that I've learned a lot about, and I spend a lot of time managing the risk of margin, and these are good times for that. There's no doubt about it.
And as long as we're talking about margin, keep in mind that there are a lot of people who get stretched out, and a day like today, they're forced to sell when they don't want to, and it exasperates the move down to a certain extent. So there's forced selling whenever you get a big day like today.
Exactly. And I will say again, like if you're on margin, and again, I've learned from experience with margin, there's been scary moments, but you never want to panic because at the end of the day, even if you are maxed out on margin and then all of a sudden you get your account and you're realizing like, oh, I need to free up some capital because of my margin, it's not all of it. You might have to unravel 25% of one position just to be okay with your broker. And then once you do that, an hour later, the market might start to turn. So, you never want to panic. Even when the market dipped to 18,000, I was still doing this type of stuff. And it was just, you got to understand the risk involved. You have to understand how much you could afford the market can go down before the margin starts to not be something that you manage. So again, it's a risky strategy, but if you manage it correctly, it gives you access to a hell of a lot more money. And that's why I've been having a lot of people ask me about it, and that's why I just wanted to throw it out on here. If you're trading options at all, especially if you're selling puts or anything like that, you need a margin account. So let's get back though to the basics here on a day like today. So my TV's off. What are we looking at?
Right now we're looking at the Dow's down 900. It's near the lows of the day, maybe a little bit off from the low. While we've been on, I just added a little bit to Boeing. Boeing got down to in the 180 area. And
I should have just dished that completely when I was up on it. I hate Boeing.
And I also added a very small amount to Penn down here because it's below 29. Sabre, I'm not going to add to because I just figure I'll use other stocks to make it back.
So, Dad, are you just holding Sabre and Alcoa?
Oh, yeah. Yeah. This is when day trading turns into long-term capital trading. Hopefully long-term capital again. Yeah, I have a lot of my Alcoa in my IRA, and I'm thinking of that as a longer-term investment. I also had a trading position in Alcoa, which is much smaller. I still like that whole concept that these trades are going to be okay when all the shit gets done with here. Those charts are solid. They're coming down to support levels. But on a day like today, like we talked about earlier, I rather add, if I'm going to be doing big adding in like an IRA, I rather do the Microsofts and Apples and JP Morgans on a day like today. And
So,
by
Dad,
the way,
can you go over how that works with adding to an IRA?
well, first of all, by the way, I mean, the bank stocks have gotten absolutely blown away over the last 3 days. And, the reason is because rates are going to be so low for so long. People are trying to figure out how the hell are the banks going to make money. So that's part of the issue. But the banks always figure out how to make money, whether it's charging
They're a bank.
customers, whatever it is. They'll figure it out. They always do. They're the smartest people in the room.
So is today a good day to enter some banks?
What's up?
Good day for a bank entry?
Well, as I said, if you're going to play banks, play the big names, Goldman Sachs, JP Morgan. I wouldn't go to the smaller banks or the ones that are kind of iffy. But, you're always.
To add to a comment that you just made about like day trading turns into like a long-term position or whatever you said.
Kind of a joke, but.
No, I want to say because again, a lot of people have been like bringing up the day trading stuff, and at least for me, I don't know about you guys, but the only time I'm day trading in a stock is if it's a stock that I would be comfortable to own long term. Because I look at I do swing trading, not day trading. Sometimes I'll do the day trading, but it's more I like to call it swing trading. And if I end up taking on a big position of a company, it's got to be a company that if I'm wrong at that moment and it starts to nosedive, I'm good to own in the long run because it's a company that's healthy and it's going to come back. I don't want to get caught trying to day trade one of these bad name companies and all of a sudden you're wrong and the stock takes a nosedive like a hearse and you're just like, oh, what am I doing right now? If you're going to make these swing trades, do it in strong names. So if you're wrong on the swing trade, you'll at least just be like, all right, I'll own the stock. At some point, it's going to come back. That's something I feel pretty strongly about, and just wanted to throw it out there. Dad, are there support levels you're starting to look at? I know you're always big on the technicalities of the chart. Are there levels that you're starting to eye now where if the market dips below them, there's another level? Talk to us about the levels.
Well, I haven't looked this morning because it's early, but, are you talking individual stocks or the whole market? What exactly?
I'm talking the whole market. I'm talking the actual S&P, Dow, and NASDAQ support levels more so than individual stocks.
Yeah, there are obviously, and round numbers are always big when you're dealing with markets that are getting absolutely clocked like they are today. And I don't know where is the Dow right now. What's the level? Down 900. Where are we? Do you have it in front of you?
Yeah, I mean, if it ends up opening down 900, it'll be hovering over 2,600.
Yeah, so 2,600 will be a level, and then 2,500 will be a level, 25,000. And the same thing with the S&P. People will pick exact levels like 29, 20, 20. I like round numbers when you have big drops like this as levels where people
So
start.
when do you think we're at the point where it's possible we're getting ugly again, where this is not a V-shaped recovery and it's more of a W?
The V, the W, I don't think that matters for what we're doing. I think people will be talking about that, but depending on what your position, if you have a lot of cash on the sidelines right now, this is a good day to put some money to work. People have been trying to figure out when to get in. Days that are down big are the days to get in. And I'm not saying buy whatever you want to buy on the opening, buy a little bit throughout the day. Because there's no way to know when the low of the day is.
I mean, we could be up by 600 points at the close. Who knows?
Yeah, or down another 600. The point is you want to spread it out over time. And a down day is better to do that stuff than an up day.
Look at the color red as sale signs instead of fear, and that'll help make sense of the market. All right, guys, let's pick to the day. Dad, we'll start with you.
Yeah, that's a tough one, but I'm gonna, I bought some Boeing below 181 here. You know, I think sometime today you'll see a rally and maybe Boeing's over 190. I'm going to stick with big names today, though.
Mike?
I'm going to add to my Duncan position. That was looking real pretty 2 days ago, and all I'm seeing are people eating donuts and drinking their coffee. So that's
today they might drink 2 cups of coffee and 2 donuts.
Yeah, so Duncan, I think it's a great entry point right now. I'll be adding to that today.
Yeah, and I'm going to just add a little bit to all my super big cap names: NVIDIA, Microsoft, Amazon. Not going to try and get cute with these small cap names, but just, like Dad said, good time to just own a little bit more of the companies that in a decade from now should be way, way higher than they are today.
Dan, let's see USFD show some life here. I don't know what's going on with that company.
Me neither, but there was more insider buying that company yesterday. So I think even the executives know that at this point it's been a little oversold from this correction. So
I threw the kitchen sink at that thing, I think, a little too early.
Well, hopefully you didn't throw the whole entire kitchen sink. I don't think you did. So, all right.
No.
Well, let's see the market turn green, guys, and enjoy the day.